It's Friday, September 24th, 2021. I hope everybody's having a fantastic day. Quick video this evening. I want to talk a little bit about the housing market here in America. I want to talk about the real estate market in China. I want to talk a little bit more about inflation. There's just a lot happening, and I want to start with this today. Markets were pretty flat across the board. Dow Jones was up 33 points today. The markets should have been decimated. And my reasoning for this is we go back to yesterday, 351,000 jobless claims last week. And we still have serious problems in the real estate market in China. And with what's happening in China right now, this job crisis that is happening right here in America, the inflation, the debt, the deficits, we should be seeing these markets absolutely being decimated right now. But you know, and I know, it's all being propped up by fake fiat money being printed out by the Fed. And this day of reckoning is going to be so lethal, ladies and gentlemen. It is going to be unquestionably one of the worst times in our history. It is going to be catastrophic. This thing is getting so out of hand. They're not letting the markets correct. They're doing everything they can do to put off tapering, everything they can do to put off raising interest rates. They've got themselves a real mess on their hands here. And now the Fed is in a corner. And when they finally do react to it, it's going to be too late. And what it's going to do is put America into the greatest depression it has ever seen. Evergrande stays silent on its $83 million bond interest payment, leaving investors in limbo. And this isn't just Asian investors. This is investors from all over the world, including quite possibly maybe your bank. Chinese officials have reportedly told local officials to prepare for Evergrande's potential demise, according to the Wall Street Journal. Evergrande was due to pay $83 million of interest on Thursday for a dollar-denominated bond that's set to mature in March of 2022. Dollar bonds are typically held by foreign investors. What I see happening here is they're going to let foreign investors, they're going to leave them out to dry, ladies and gentlemen. And I guess this is what you get for investing in a communist country. Evergrande has not said whether it will fulfill its interest payments on its US dollar bond. It is looking like they are not going to do that. Article, and that was on CNBC, by the way. This one comes from The Hedge. China steps in to ensure Evergrande funds used to complete housing project not pay creditors. Bloomberg reports that China's housing regulator has stepped up oversight of China's Evergrande group bank accounts to ensure funds to complete housing projects and not diverted to pay creditors. Homeowners and China's property sector come first. So that's going to be bad news for banks that are invested, bondholders that are invested, and creditors who are invested in Evergrande. So again, this is what you get for investing in a communist country. And we don't know all of the entities holding debt in Evergrande, but I did a video a couple days ago, and there's some very, very big ones holding a lot of debt in Evergrande. Another article today, the housing market is almost frozen. An even bigger a problem emerges for China. China has $60 trillion in its property sector. $60 trillion, largest asset class in the entire world. 60% year over year, they've seen a fall in home sales. And the question is, how much of effect is this going to have right here on America? What type of effect will it have on the real estate market here in America, if any? Please comment down below. Let me know what you think. A full-blown property crisis would impact virtually every aspect of the Chinese economy, starting with capital markets, shadow banks, and social stability. For global investors, it would be the equity market. We could see big problems in the stock market if things begin to erupt over in China with this Evergrande development company. So we will stand by and see what happens. Again, I'm just reporting the news to all of you. Let me know what you think about this. Is it going to have an effect on our stock market? Will it have an effect on our housing market? U.S. new home sales rise in August remain below pre-crisis levels. New home sales were up 1.5% month over month. New home sales are down 24% year over year, while new home prices are up 20% year over year. There is no doubt that I think we have reached a climax here with the housing bubble, and it is now a matter of time that we're going to see the air coming out of this bubble, and it's a matter of how fast the air comes out of the bubble. Look, we are an event away from triggering a housing burst, okay, a housing bubble burst. I truly do believe if we start seeing big trouble in China, it is going to affect our stock market, and it is going to affect our housing market. CNBC, mortgage rates rose sharply this week, and there could be more increases on the way. Is this the beginning, ladies and gentlemen, of a trend? Are we going to begin to see mortgage rates begin to creep up more and more now? Average rate on a 30-year fixed mortgage just crossed back over 3% early this week, and then jumped 9 basis points on Thursday to 3.1%. And I think this is related to the talk coming from the Fed that there's going to be tapering, and that the Fed's fund rate is going to begin to rise next year. And they're talking about 3 rate hikes in 2023. But look, that's all baloney. We don't know. They cannot taper as soon as there's a hiccup. As soon as we hit a speed bump, the Fed is going to expand that balance sheet as far as to 10 trillion, 12 trillion, whatever it has to do. And they will do everything they have to do to delay raising rates until they are forced to raise rates. And we are now hearing words of hyperinflation now coming to America. And if the inflation, as I've said before, as many of you know, if this inflation continues to run hot, they are going to be forced to do the inevitable, and that is raise rates. And this is going to be a huge game changer. You are going to see the housing market crumble. You're going to see big trouble in America. You're going to see the stock market in big trouble. The day of reckoning is coming, ladies and gentlemen. It is not going to be put off. When we come to a point where they no longer can limp along with printing this money, because what it's doing is causing more and more inflation, and it's going to cause us to run into hyperinflation. Look, they're talking about another $3.5 trillion with this budget plan, $1 trillion in the infrastructure plan. Look, this is going to be nearly $5 trillion of more money being printed, more taxation, more inflation. And the inevitable is coming. The reckoning is going to come. Interest rates are going to be forced to go up. They are going to have no choice. Either that, or we just turn into Venezuela, and our money is completely worthless. And it didn't have to be this way. Ask yourself, why are we going on nearly 12 years of literally 0% interest? We've been printing money for well over a decade. They did not do anything after the 2008 crash except print more money, create more debt. They did nothing to fix the problem. And now the problem has gotten bigger and bigger, and the solution is just print more money. We've been doing this for over a decade, and it's not working. It is now beginning to come undone. And the average person now is beginning to see the repercussions here, because every time they go to the store, they see the prices. I went to the store today. I went to the grocery store. I got some bacon. I pick up the package, and I'm like, something looks peculiar here. This package looks so small. It was 10 ounces. Usually when I buy bacon, it's 16 ounces. The package was 10 ounces. Then I picked up another one. It was 12 ounces. And so we're watching shrinkflation now. So the prices, they're trying to keep the price the same, but they're cutting out 4 slices of bacon in the package. So it's so obvious what's going on, and now the average consumer is beginning to realize it, because they're picking up the package and it's half the size it used to be, and it costs just as much or more. China declares all virtual currency transactions illegal, sending crypto prices tumbling. I just checked Bitcoin a minute ago. It's down 2,000. Earlier today, it was down 3,000. Bitcoin on CNBC here today. Bitcoin and Ether slide as China intensifies crackdown on cryptocurrencies. The People's Bank of China said all crypto-related activities are illegal. And this is having an effect, no doubt, on the cryptos. Friday, Jim Cramer says crypto bulls are fooling themselves about the China ban. They don't want rich people hiding money. China doesn't want rich people hiding money. They want to know everything that everybody has. Jim Cramer said crypto people are promoters. This is not a good day to promote. And when you look at the Chinese government, look, they do not want competition. The Chinese bank is not going to have competition. And this is going to have, again, a very negative effect on cryptos. China talking about their own digital currency. Do you think they're going to allow competition? Absolutely not. The hedge hyperinflation tops list of fears for UBS clients. That on the hedge today. They're trying to pass this $3.5 trillion stimulus package, also known as the budget plan. They're talking about raising the debt ceiling, even talking about eliminating the debt ceiling. We don't need it. It's just tradition. Get rid of it. That's what they're saying. U.S. debt exploding, deficits exploding. The Fed's balance sheet is gone vertical, ladies and gentlemen, and central banks keep reassuring us everything is fine, nothing to fear. When they tell you that there's nothing to fear and that everything is okay, you better get very, very worried. It's a good weekend to go out and buy a little extra food and water. It's a good weekend to get a little exercise. It's a good weekend to get in the mental mindset of what's coming. We are not going to turn this or reverse this. We are at a point now of no return. We are on uncharted water. There is no going back, ladies and gentlemen. We cannot reverse this. We are heading deep down a very, very ugly place here, no doubt. CNBC, Costco, Nike, FedEx are warning there's more inflation set to hit consumers as holidays approach. Just take a look at the 73 cargo ships sitting off the West Coast here in Long Beach. Rising shipping costs, supply chain bottlenecks, cost to ship containers overseas skyrocketing. 40-foot containers from Shanghai to New York a year ago cost $2,000. Now it's $16,000. Many companies have indicated that consumers, at least for now, are willing to take on the higher prices. But the question is that you have to ask, and I have to ask, how long can they keep taking on these higher prices? Where's the breaking point? And when we hit that point, what happens? What's going to happen? So, again, there's just so much happening right now, so much that you really need to be aware of, and yet people are ignoring the truth, ignoring reality. Look, when I pick up that bacon today, there's no ignoring that that's 10 ounces and not 16 ounces, yet they're charging me the old price of what 16 ounces used to cost. That's now what 10 ounces cost. There's no denying that, and people are beginning to realize it, but it's going to be too late for so many people because they just took the last year and a half when they got all that stimulus money, all the unemployment checks, all the benefit checks, and they did nothing to prepare for a rainy day. They did nothing. They just continued to party on and dance to the music. And now the music is winding down and people are beginning to panic. And we don't hear what's happening with the rent evictions now. We're not hearing about the expiration coming with the mortgage forbearance and what people are going to do. And we're just watching the news. I hardly heard anything about Evergrande. It's like it doesn't exist. And I guess that we are a society now that if we don't talk about it, there's no problem. Ignore it and it'll just go away. Something is going to happen that we can no longer ignore. And when you go to the store and I go to the store, we can't ignore the packages are getting smaller and the prices are going up. We can't ignore every time we go to the gas pump, it's going up. We can't ignore every time we pay taxes, they're going up. Every time we pay rent, it's going up. Everything is going up. And people are beginning to realize that they can't ignore it. They cannot ignore it. And now they're going to have to face it. And how many people out there are prepared to face reality? How many people are prepared to face the truth? They spend all their money They blew all their money. Now they have no powder saved up, no dry powder, no emergency fund, and now they're living day to day hoping nothing bad happens. And that's a scary place to be, because hope is not going to save you. Hope is not going to protect you. What is going to protect you is putting away hard, tangible assets, putting away some cash, getting the debts paid down. But this is stuff that everybody should have been doing years ago. And unfortunately, most people thought the party would never end. And now the music is winding down. Take this weekend and get a little bit more prepared, ladies and gentlemen, because all this stuff right here, it's real. And these problems aren't going away. They're going to get much worse, and they're going to affect every one of us. And the better prepared you are, the more you put the odds in your favor, the better chance you have of surviving this and prospering. God bless. I look forward to talking with all of you very, very soon. I want to shout out to my buddy Alan in Florida. I had a great conversation with him last night, and he's doing the same thing. Gold, silver, and patience. The sales are coming, ladies and gentlemen. So get your house in order and get ready. It's going to be a very, very bumpy ride. And remember, you never know what you're going to wake up to tomorrow. So be ready. God bless.